Hi guys, so in this video we'll be going to support and resistance, and we're just gonna focus on going long or buying at this moment. We're not gonna focus on shorting the market, so just long or buying stocks or crypto. So what is support? So let's just start with support. Support is a area where the price consolidates after a pullback. So what does this mean? So let's just go through an example. Pullback is basically where the short sellers or the sellers take control of the market and the price tends to fall down. So a support is an area where the sellers become weak, and it's a place where the price consolidates, which is basically trade within a certain range for a certain period of time. So let's go through an example. So behind me is the chart of Apple. If we're just looking here, we can see that the price has rallied all the way up to $180 a share, and it's been staying there, and then it fell to somewhere around 137 or 139, between that range. So what we're looking at here is you can clearly see that price rose, but then it fell. It stopped somewhere around here. So I've just drawn a line for now. So that is an area of support. So one of the main things is do not treat support as just one line. It is always an area. Why? That's because let's say price fell to, just use the same example, price fell to 138. It's definitely not going to bounce back from that point. It's going to basically go down a bit further, because if I'm a trader, if I'm buying and selling stocks, I want the price to be lowest when I'm buying it. That way I can maximize my profit. So that is why it should be treated as an area rather than just a line. So let's just draw it on our chart. So what I've drawn is area of support basically. If we look here, we can clearly see that it is a big range, but we can see that price rose up, it fell, it didn't fall lower because it came into an area of support, which is indicated by the green rectangle. It rallied all the way up, it fell down again, consolidated over that area and rallied again, and now is basically testing that support range. So that is basically what support is. It's where the buyers step in because they view that as an area of value. So if we're looking at this range, that is where the buyers think, okay, this is a good place to get in, and based on my trades or my investments, I feel like that's a good place to get in. So I would be willing to buy at that price, and that is why support forms. Just go to another example. If we look at the chart behind me again, we're looking at Bitcoin. Once again, support shouldn't be treated as just a line. So let's just draw an area of support rather than just drawing one line. Okay, so over here we can see that the price fell. It basically consolidated somewhere between 18,600 and 17,800. So that acts as an area of support. It rose up, fell, once again met the criteria of the buyers, which is they viewed that as an area of value. So they bought in, meaning it became an area of support. The price rallied all the way up. It once again had a pullback, reached that support once again. Buyers thought it was a good place to get in. It went up, fell back down, and then now it's just testing that area of support, which is clearly marked by this. So we can see that it is currently testing that area of support, which is indicated by this. So yeah, that is basically what support is. It's a place where the buyers are stronger than the sellers. So the sellers obviously want the price to fall down, and they want the price to drop below the area of support, but the buyers, they're willing to buy more, they're willing to step in, take the power away from the sellers, and basically invest or trade at that level and buy in, which is why we have an area of support. So one of the main things is you shouldn't just buy into a asset just because it has reached an area of support. Be aware of the overall trend in the market. One of the videos I've done about knowing what environment you are in, I definitely recommend you checking that out, because support and resistance, that is a very good place to get in and get out, but always be aware of the market that you're trading in. So that is basically what support is. We're just going to go over resistance as well. So just like the logic of support, but it's just the other way around. So let's just go through that as well. Resistance. What is resistance? Resistance is basically a point or a range where the price basically rallies up and hits a wall, or basically that's where the growth or the price increases stop. So this is a place where the sellers typically tend to take control over the asset. And why does this happen? So one of the main reasons is the sellers view the stock or the crypto to be overbought. They feel like the value that the crypto has is basically just hyped up, and they see potential downside for the asset, so they want to sell the stock. Another reason why area of resistance could be formed is because, let's say I bought in at this range over here. So I bought in at typically, let's say 139, and it rallied all the way up here. I can see that in the past sellers have sold their shares here. So what I would do is, as a buyer, I see the potential resistance coming up, so I would sell my shares as well, which means the supply increases. When supply increases, price falls. That's just basic economics 101. So let's just go through this example as well. We're looking at Apple. The price rallied, and okay, so I've drawn okay, so I've drawn the resistance as just one line. Once again, simple basics, it's not just one line, it's an area. So let's just get that fixed. So we can see that the price rallied all the way up to here. So once it reached that level of somewhere between $178 and $181, we can see that the people who bought in at the support levels, they viewed that to be overbought, and sellers did realize that the stock is overbought. They didn't see value in it, so they are more likely to take shorts as well or sell. So we can see that it rallied all the way up here, hit this area of resistance, it fell down, tried to rally back up, once again almost hit that level of resistance, fell down, rallied up again, hit that resistance, fell, rise, fell. So that is basically one of the best charts that I could explain this on. This area of support, this area of resistance, price rallies up, hits resistance, falls back down, all the way to support, rallies up, hits resistance, falls back. So that's very easy. Then this is the Apple chart. It's relatively simple to understand. Let's just go to another example. Okay, so the second example, we are looking at Bitcoin. So this was back in March, and we can see that price rallied all the way up to somewhere around $45,000, hit a resistance point, fell back down, tried to rally up and then break that resistance, but no, sellers stepped in, so prices fell. Once again, we can see that the buyers had tried to break that range of resistance, but the sellers were too strong, which led to an eventual fall. So always be careful of the resistance levels and support levels as well. Always be aware of the support and resistance levels in the future, so that when you trade, you are aware of basically where the sellers or where the buyers are stepping in, and you can use that to your advantage. Now let's take it one step further. So what can usually happen is a previous resistance level can become support level. So Apple over here, we can see that somewhere back in July 2020, price rallied up. So this area over here used to be resistance. So we can see that price rallied up, hit resistance, fell down, rallied up, hit resistance, fell, rose, hit resistance, fell down, and then it broke this level of resistance. And once it broke, that resistance level flipped into a support level, as we can see here. So resistance turns support. So why does this happen? One of the main reasons is due to buyers viewing that as an area of value, and people who missed out on the first move, they tend to get back into a trade at that level again. So I'll just break that down for you. We can see here that from here to here the price rallied, and let's say 1,000 people missed out on that trade. So once again, when it hit that area of resistance, which has now turned into support, people are willing to buy in. So I missed the trade on the first turnaround, and then in the second round I got to invest. So once people realize that there's value there and money to be made, what they do is they buy in. So once they buy in, we can clearly see that the stock rallies or the crypto rallies all the way up. So that is one of the main reasons why an area of resistance can turn into support. So what we're looking on the flip side is support turned into resistance. So what we can clearly see here is this area has acted as a support level from here until here. What we can see is the price rallied up, fell back down in that area of support, buyer stepped in, price rose, fell back down again, buyer stepped in, and then it rose. But once it did break below, the sellers took control of the stock and prices tried to rise here, acted as a resistance level, fell back down. The price rallied all the way back up to that area of resistance, which was previously support, and then it broke down below. So that is one of the basics of trading, because support can turn into a resistance or resistance can turn into a support. Be careful, be aware of the price range. Once again, treat it as an area, not just one line, because there's always traders who want to get the best possible price, and that is why there is a bit of a area rather than just a direct price. So yeah, be careful with that. That's the basics of support and resistance, and I've given you examples as well. But I do recommend is go out on your charting platform or on your trading platform, try to view or try to find some areas of support and resistance. Also, don't overcomplicate it. I'll leave it there for the day. Hope you guys have a good one, and goodbye. And yeah, like and subscribe. See ya.